What's good, everybody? Welcome to the Closing Beat. Happy Monday. How's it going today? Hope you're having a good day so far. Good start to the week here. We'll cover that in the markets. We are financial advisors here at Jazz Wealth. We build and manage our own funds. You can see them right on our website there. We use a mix of those funds depending on your investment goals. Hope you'll check us out there at Jazz Wealth. Also, our dojo is live. That's our video library, but soon to be so much more. I should share a picture every day with you guys or something so you can see what it looks like. But so far, great reviews. Everybody seems to love it. If you're one of our customers, you haven't had a chance to check it out, you don't have to spend a lot of time in there. Just go in there, watch a video or two, and let me know what you think. Also, if you're one of our customers, your retirement forms are available. If you had any kind of withdrawal, so if you did an early withdrawal, any kind of non-qualified distribution from your IRAs, they're available. If you didn't and you were a good investor, then there's no form needed for you. Taxable or individual accounts, joint accounts, those will be ready in February, of course, along with every other brokerage firm out there. Well, let's get started. Look at the markets here today. Started off the week positive, got a busy week earnings-wise. The Dow put up 175. The Nasdaq was the real sort of bright spot today with the tech names, so that added 83 points. And the S&P up 18, a little burst of that coming right at the end of the day, which you can see by that chart on the bottom right-hand corner of your screen. That's a 5-minute chart to show you just kind of how the day progressed, the general heartbeat of the market throughout the day. And you can see it was pretty much positive all day. Nobody really had any. Honestly, it was just kind of a slow day. Like there just wasn't a lot really to grab onto. If you watched financial media, they were focused on things that otherwise they would never have talked about. Day after the Super Bowl, right? So everybody's just kind of easing back into it again, I guess. Anyways, FANG stocks were a big focus today, but earnings will be the secondary focus. There are 237 names that have reported as of before 4 o'clock today in the S&P 500. 68.5% of them have beat on earnings. That's good. That's near the higher end of what we would normally expect. Every sector besides materials has beaten on earnings. They've shown growth in earnings there. So if that stays the same, from a purely valuation standpoint, S&P 500 valuation, it's hard to price the S&P under the most recent lows there that we saw in December. So if you're a bull and you're looking for some sort of confirmation that the markets will not go under that low, well, there's one for you. It's at least something. Another interesting fact here, the average change, remember how we've been talking about the last few weeks how investors are responding quite positively to earnings that were okay, right? They were better than what we expected, but they weren't amazing, right? Earnings reports just weren't killing it. The average one-day change of stocks is 1.12%. That's the second highest ever in history for the average change following the day of earnings, just meaning how people responded to earnings, positive by 1.12%. It's on track to be the best in history, so I'll keep you posted on that. And remember, a lot of this is because we lowered the bar. All through December, you had people going, oh my God, the S&P is not going to have any earnings growth, meaning zero earnings growth at all. We prepped your minds for it. Where are we at? 12.8%. Right? So, or 12.5% earnings growth right now. We were at 20% quarter over quarter earnings growth. So you can see we've slowed, right? If you just follow this sort of thing, we're at 12.5%, but growth is still growth. It's just not as wild and crazy as it was. And so, I don't know, is that a bad thing? We'll see. We're going to cover something with the sectors here in just a second, but let me go over real quick to the charts. Here's your S&P 500, just a stone's throw away from the 200-day moving average. The Dow still strong and pushing above the 200-day moving average for now, also above the downtrend. The Nasdaq not really having any issue at all, staying strong up here. Gave back a little bit here because of Alphabet's earnings. We'll cover that here just in a moment. And then the Russell 2000 continuing to just plug along there, looking pretty good. Now, sector-wise, here's what happened today. You got tech stocks. Very strong day for tech stocks. I mentioned already FANG names. So if you look inside the tech sector and you play the FANG game, you go Facebook, hey, nice day, 2% there. Amazon, hey, 0.5%, not too great there. Netflix, there's 3.38% on the day. You got Alphabet, well, this one's misleading now, 2% higher on the day. However, it's already given all of that back after hours because of earnings. So everyone's focused on FANG growing, or at least having a good day today. And because of that, tech in general did okay. So if you look at the broad-based ETFs, here's the XLK just as an example. Only about 3% left to go to get to the 200-day moving average. However, that's going to change tomorrow now that if everything stays the same with Alphabet's earnings there. You look at regional bank stocks, they did well today, officially recovering everything that they lost last Thursday, sitting near the highs of a range, right? So all looks good there. Stay with me because I'm going to go over something here. Retail stocks recovering everything that they lost on Friday. If you're one of our customers, you have no idea what you're looking at here. These are candlesticks, 3 classes in the dojo for you to check out. You can go watch those. And of course, if you need help, you let me know. Our oil service stocks also stronger on the day. You get a pattern here? We've been saying nonstop, hey, transport's looking good, picking up steam, catching up with everybody else. You got real estate investment trusts, new highs, like an unbelievable recovery there. Consumer discretionary stocks at the higher end of their range, consumer staples at the higher end of their range. Now, here's the lesson of the day. Let's zoom out a little bit. Let's just change all these little blips on the screen to a weekly time period. So now every single blip that you see represents a week's worth of performance. So if we zoom out and now look at this weekly time period, here's the same tech sector we just looked at, the XLK. Doesn't look so good anymore, does it? It looks like something that broke down hard and recovered some of it, almost half of it. So that's kind of okay. Here's your regional banks that perform well today. Holy cow, they've been battered to death, recovered some of it, but man, this doesn't look too healthy, right? Oil. Where's my oil on the screen here? We're talking about this as the strongest performing area of the market. Does that look so good when you zoom out? It doesn't look amazing. It's just a little rally off the lows there. Can I just show the actual price of oil? There you go. Little tiny rally off lows. So even though it's getting the media attention for being super duper strong, oh my God, it's one of the best performing areas, is it, right? Like for most of us that are long-term investors, let's zoom out a little bit and see, and this is what you see, just a tiny little rally. Transports rallying back up into a whole lot of selling pressure there. REITs, they're probably the only ones that look sort of decent here, breaking above all this area here. Look if you go back to October of of 2017. Right here is October 2017. If we just draw a line straight across, what's happened to REITs there? Basically, it's stuck inside of a wide range. So really no progress there. So all I'm trying to say is don't be misled by things that seem really, really good or where you fear you're missing out because things look really good. In reality, if you zoom out, all of a sudden it's not really that interesting. Consumer staples, look at how sideways it's been here. Not a whole lot going on. Of course, it's nice to see these things headed higher, but not a lot going on. Home builders, all right, great recovery. Good job, guys. But you still have a lot of work to do as far as the home builders go. And so that's all I'm pointing out. Semiconductors, same thing. You get the picture. Zoom out, take a look, see what you think about those. All right, that's it for my sector review here. Let's go over to stock charts you may see in the news. Not a whole lot today. That's all that interesting. Papa John's got a 9% rally on Papa John's. Starboard, they officially have a $200 million position in Papa John's, and the Starboard CEO is now the chairman of the board for Papa John's. So some changing coming there. They also rejected an offer from Papa John himself. Clorox higher by 5.5% on the day. Earnings better than actually much better than expected. They beat by 10 cents on earnings. Revenue was basically what everybody expected. Volume was 2 times higher than not 2 times higher, was 2 times higher than the highest it has been in the last year. Well above average today volume, which is expected. I mean, Clorox is kind of like, what? Like, how often do you look at Clorox? It gets attention around earnings and then it kind of disappears. So that's Clorox there. We talked about it. Maxwell Technologies, these guys, the stock was higher by 50% today, if you happen to catch it. Tesla's buying them, $218 million in an all-stock deal. That's what puts it at that $460 a share at the moment. These are the guys that make like a powder. I'm not a pro at this. I have no idea. I read this. It's like a powderized version of something that goes into the battery that extends its lifespan. Tesla's banking on this extending the driving distance for their cars by just buying the technology versus trying to create it on their own. Remember, they got over $4 billion in cash, so them making some deals is not out of the question to see that going forward. $460 a share is where it finished the day. $459 if you want to be specific there. Okay, we got Alphabet reporting after the close here, or Google is Goog with an L at the end of it. Alphabet reported earnings better than expected, revenue better than expected, a little bit lower in terms of their other bets, those sort of interesting companies that they have. AI did well, and it's unbelievable if you happen to look into what they're working on there. Paid clicks were higher, and cost per click was down. So not so good there. They are doing a share buyback. I didn't see the number. Was it 12 billion? It was sort of an insignificant number. It didn't really, jump out as something interesting. And because of that, you got the stock trading at 11.14. That erases all of today's action. So down just about 2.25% on Google. Okay, looking forward here, you got Disney. That'll be the talk of tomorrow. Disney reporting earnings. They beat on earnings 80% of the time. This could be nice. If you look at their chart, to see Disney pop from here could really set the tone for not only this stock, but sort of this category in general. So don't know how else to say that. So they beat 80% of the time on earnings. This is what's interesting. You go, well, Dustin, I don't know. What's the average move? Let's say they beat on earnings. What should I expect? Well, investors are actually pricing in a $2.70 move for tomorrow after they report earnings. The average one-day move, check this out, the average one-day move for Disney is 2.77% when they report their fourth quarter earnings. The easy way to say this is if you take every fourth quarter earnings they've ever had, tally them all up, what's the average gain or loss? 2.77%. $2.70 is almost 2.77% of the current stock price. So investors aren't stupid, right? They know the stats. I just shared them with you. Now you know the stats. Do you know this sort of stuff when you're maybe trading in the short term or sort of actively investing? These are things to keep track of because everybody else knows, and there's proof that they already know what's going on there. So that'll be Disney tomorrow. Also, you have a lot of stocks in the energy space. Archer Daniels, British Petroleum, APC, by the way. And then you have Viacom, of course, Disney, and EA Sports. That'll grab a little attention. Estee Lauder, by the way, if you follow that sort of thing. A couple other news things. AMD, these are all out of Barron's. Barron's does a whole lot over the weekends to try to get your attention. Barron's said Boeing is getting close to an order from Emirates Air for the 777 versus the Airbus. That's been kind of a contested thing there. And Barron's says that AMD is just getting started on a multi-year product story. More to come on that. They sort of teased it. And Redfin, that's a recent IPO. It's the real estate company, 1.5% to sell your house and such. Susquehanna, there was an analyst there that said Amazon should just gobble them up. There was a lot of that today. JP Morgan said Apple should just buy Netflix. I think it was just a slow news day, to be honest. Like, why? Analysts get paid all this money to just share their opinion. I don't understand why we focused on that today, but probably lack of other news coming out there. All right, if you have any questions, happy to answer. Otherwise, I'll wrap it up. I'll scroll back maybe a little bit. Morningstar says, what do you think of Kronos? Very, very extended in the short term. Very hard to chase these stocks. These pot stocks have been difficult, I'll give you that. Very extended in the short term. I feel like it'll pull back just based on how extended it is. That's incredible. Nice rally there. The 52-week high for Apple, you think it breaks above that this year? No. I don't think this year, only because you don't expect that sort of tailwind from everywhere else. If it was like, hey, earnings growth is good across the board, we're still hovering at that 20% level, you had that bullish sentiment overall, then maybe you have tailwinds from the tech space in general, big tech. You don't quite have that right now. Subject to change, I guess. Ricardo wants the markets to pull back. I kind of do, man. I'm with you. I like when the markets fall. I don't like when it falls so scary and aggressively just pulls back and stuff. But I do like a steady decline myself. Long-term investor, you know what I mean? 304 jobs. Yeah, that was Friday. That was impressive. Yep. Okay, well, that's all I have there. Did I cover everything? I did cover everything. I appreciate you watching. If you enjoyed, maybe hit the subscribe button. We'll be back tomorrow, of course, to do it all again. And, yep, that's it. Enjoy.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.